Based on the historical data and forecast, Bitcoin shows a downtrend, particularly evident in the recent days with prices fluctuating around $78,000 to $83,000. The RSI consistently dips below 50, indicating a weakening momentum, and approaching the oversold level of 20 on several days. The forecast suggests a continuation of this downward trend, with prices expected to hover between $77,800 and $80,400. Considering the support price of $81,100 and the resistance of $83,700, we will implement a short selling strategy when the price touches the resistance level. The strategy involves entering a short position at $83,700. The stop loss will be set at $83,700 plus 500 is equal to $84,200 to protect against a potential upward reversal. The target price will be $81,100, aligning with the established support level. This strategy leverages the downtrend, the RSI's oversold signals, and the Bollinger Band's upper limit to maximize potential returns while mitigating risk. The portfolio will be 70% short Bitcoin and 30% in cash. Based on the historical data and forecast, Ethereum has been experiencing a downtrend, with a significant drop on April 9, 2025, to $1,470. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week predicts a continued downward trend, with prices potentially reaching $1,420. Considering the RSI is currently in oversold territory, around 24.7 to 39.3, a contrarian strategy could be employed. We can initiate a long position at $1,430, placing a stop loss at $1,400 to mitigate potential losses if the downtrend persists. A conservative target price would be $1,550, aiming to capitalize on a potential short-term bounce. To refine the strategy, we will incorporate the Bollinger Bands. The price consistently trading below the lower band suggests further downside potential. However, a bounce from the lower band could offer a favorable entry point. We will prioritize the RSI strategy, as it indicates an oversold condition. Therefore, the final portfolio will be a long position at $1,430 with a stop loss at $1,400 and a target price of $1,550. This strategy balances the bearish trend with the potential for a short-term rebound from oversold levels, aiming for a reasonable return while managing risk. Based on the historical data and forecast, XRP shows a downward trend. The price has been fluctuating within the support of $2.02 and the resistance of $2.14. The RSI values are generally below 50, indicating a bearish momentum, and the forecast predicts a further decline. Considering these factors, I recommend a short selling strategy. We will enter a short position at $2.05, placing a stop-loss order at $2.14 to limit potential losses if the price unexpectedly rises. The initial target price is $1.81, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the bottom band of $1.8, we will consider covering the short position, securing a profit. Conversely, if the price reaches the top band of $2.56, it signals a potential trend reversal, and we will immediately close the position to prevent significant losses. This combined approach, utilizing both RSI and Bollinger Bands, aims to maximize returns while effectively managing risk. The final portfolio will be 60% short selling strategy and 40% RSI strategy. Based on the historical data and forecast, BNB shows a downtrend. The RSI consistently dipped below 50, with a significant drop to 34.3 on April 9, indicating oversold conditions. The Bollinger Bands are also widening, suggesting increased volatility and a potential continuation of the downward trend. Considering these factors, I recommend a short position. Entry price should be $571. The stop loss should be placed just above the upper Bollinger Band, at $656 to limit potential losses if the price unexpectedly reverses. The initial target price is set at $548, aligning with the forecast price and a reasonable profit margin. To refine this strategy, I will incorporate a trailing stop loss. Once the price reaches $548, move the stop loss to $552, the support level, to protect profits and allow for potential further gains if the downtrend continues. If the price falls below $548, consider exiting the position or adjusting the stop loss further based on subsequent price action and technical indicators. This dynamic approach combines the initial short position with risk management and profit-taking strategies to maximize potential returns while minimizing losses in this volatile market. Based on the historical data and forecast, Solana exhibits a downtrend, particularly evident in the recent price action and the projected decline over the next week. The RSI consistently hovers below 50, with dips below 33 indicating oversold conditions, suggesting a bearish sentiment. Considering the support price of $117 and the forecast prices, a short position appears prudent. Entry price will be $111. The stop loss will be set slightly above the recent swing high at $119 to mitigate potential losses if the price reverses. The initial target price will be $105, aligning with the forecast price and a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. The price is consistently trading near the lower band, reinforcing the downtrend. We will implement a layered exit strategy. Upon reaching the target price of $105, we will take partial profits. If the price continues to decline, we will adjust the target price to $106, capitalizing on the downward momentum. If the price reaches $106, we will take another partial profit. We will maintain a tight stop loss at $119 throughout the trade, adjusting it downwards as the price declines to lock in profits and manage risk effectively. This combined approach leverages RSI for entry and exit signals, supported by Bollinger Bands for trend confirmation and layered profit-taking. Based on the historical data and forecast, Doge-Coin shows a downtrend with increasing volatility. The price has been fluctuating between a support of $0.142 and a resistance of $0.163. The RSI has been consistently below 50, indicating a bearish momentum, and recently approached the oversold level of 32.7. The Bollinger Bands are widening, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a short selling strategy with a conservative approach. My proposed strategy is to enter a short position at $0.16, coinciding with a slight rejection from the resistance level. The stop loss should be placed at $0.163, just above the resistance, to limit potential losses if the price breaks through. The initial target price is set at $0.142, the support level, offering a reasonable profit margin. Given the forecast of further decline to $0.141, I suggest scaling out 50% of the position at $0.15 and moving the stop loss to the entry price of $0.16. The remaining position can be closed at $0.142, securing the overall profit. This approach combines RSI signals, Bollinger Bands volatility, and support/resistance levels for a balanced risk-reward profile. Based on the historical data and forecast, Cardano shows a downtrend. The price has consistently traded within a descending channel, nearing the support level of $0.559. The RSI consistently remains below 50, indicating weakening momentum, and recently dipped below 35, signaling an oversold condition. The forecast for the next week predicts a continued decline, reaching as low as $0.57. Considering these factors, I recommend a short selling strategy. Entry price should be $0.573, with a stop loss placed slightly above the recent high of $0.586 at $0.591. The initial target price is the support level of $0.559. To refine the strategy, we'll incorporate Bollinger Bands. The price has consistently been near the lower band, reinforcing the downtrend. If the price touches the lower band of $0.57, it strengthens the short position. If the price breaks above the upper band, it signals a potential trend reversal. Therefore, if the price reaches $0.57, we can add more short positions. The second target price should be $0.559. If the price reaches $0.559, we can close the position and secure profits. This combined RSI and Bollinger Band strategy aims to capitalize on the current downtrend while managing risk effectively. Based on the historical data and forecast, TRON has shown a slight upward trend, fluctuating within the support and resistance levels of 0.234 and 0.246. The RSI indicator has been oscillating around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Given the forecast prices slightly above the recent closing prices, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.234. The stop loss will be set just below the support at $0.232 to protect against potential downside breaks. The initial target price will be the resistance level of $0.246, aiming for a substantial profit. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the price retraces to $0.234 and the RSI is below 50, confirming an oversold condition, we'll enter a long position at $0.234. The stop loss remains at $0.232. If the price approaches the upper Bollinger Band, indicating potential overbought conditions, we will consider taking partial profits at $0.241. For a more aggressive approach, we can hold until the resistance of $0.246 is reached. This blended strategy balances risk and reward, capitalizing on the observed upward trend while incorporating technical indicators for improved precision. Based on the historical data and forecast, Chainlink exhibits a downtrend. The price has been consistently trading within a range between $10.9 and $12.9, with a recent breach of the support level at $10.9 on April 9, 2025. The RSI consistently indicates oversold conditions, with values below 40, suggesting potential for a short-term bounce. The Bollinger Bands show that the price is approaching the lower band, further reinforcing the possibility of a short-term rebound. Therefore, I recommend a contrarian strategy, anticipating a short-term price increase. I suggest entering a long position at $11.1. The stop loss should be placed just below the support level at $10.8 to limit potential losses. The target price should be set at $12.7, aligning with the recent resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 35, it indicates increasing buying pressure, confirming the potential for a rebound. If the price touches the lower Bollinger Band, it suggests an oversold condition, further supporting the long entry. Given the forecast for April 10, 2025, at $12.1, I suggest a slightly adjusted entry point at $11.6. The stop loss remains at $10.8. The target price is adjusted upwards to $12.9, reflecting the potential for a move towards the recent resistance level. This combined strategy leverages both technical indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend with increased volatility. The RSI consistently fluctuates, dipping below 45 on several days, indicating oversold conditions. The Bollinger Bands show a narrowing range recently, suggesting a potential breakout. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. We will implement a long position when the RSI falls below 35 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. The entry price will be $3.18 when the RSI is 38.3 and the price touches the lower Bollinger Band. The stop loss will be set at $2.92, just below the established support level, to limit potential losses. The initial target price will be $3.6, aligning with the resistance level. If the price reaches this target, we will move the stop loss to the entry price of $3.18 to secure profits and protect against a potential reversal. This strategy balances risk and reward, utilizing technical indicators to identify favorable entry points and manage potential downside. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a downtrend with significant volatility. The RSI consistently dips below 50, indicating weakening momentum. The forecast predicts a continued decline, with prices dropping to $0.374. The support level at $0.429 has been tested multiple times, suggesting it's a crucial level. Given this analysis, I recommend a short position strategy. Entry price will be $0.408 on April 10, 2025. The stop loss should be set slightly above the resistance level at $0.471, specifically $0.471, to protect against unexpected upward movements. The initial target price will be $0.388, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the bottom band, suggesting a potential bounce. However, the downtrend is strong. Therefore, I will use a modified RSI strategy with a conservative approach. The entry price will be $0.383 on April 13, 2025, when the RSI reaches 30. The stop loss will be $0.408. The first target price will be $0.374, coinciding with the forecast low. If the price reaches $0.374, we'll move the stop loss to the entry price of $0.383, securing profits and allowing for further gains if the downtrend continues. This portfolio combines the strength of the RSI and Bollinger Bands to maximize returns while managing risk. Based on the historical data and forecast, Algorand shows a downtrend. The RSI consistently remains below 60, indicating a lack of strong bullish momentum. The forecast for the next week projects a continued decline, with prices falling to $0.159. The support level at $0.177 has acted as a barrier, and the resistance at $0.186 has not been breached. Considering these factors, a short selling strategy is recommended. We will enter a short position at $0.18, placing a stop-loss order at $0.186 to limit potential losses. The initial target price is set at $0.16, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, and we will consider covering our short position partially at $0.156. Conversely, if the price reaches the upper band, it indicates a potential overbought condition, and we will tighten our stop loss to $0.183. This dynamic adjustment allows us to adapt to market fluctuations and maximize profits while minimizing risks. The final portfolio will prioritize short selling with a combination of RSI and Bollinger Bands for enhanced efficiency. Based on the historical data and forecast, Lido Dow exhibits a clear downtrend, particularly evident in the recent sharp decline and the pessimistic forecast for the upcoming week. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with readings frequently dipping below 30, signaling oversold conditions. The Bollinger Bands are widening, suggesting increased volatility and potentially further price swings. Given the support level at $0.63 and the forecast predicting prices below $0.6, a short selling strategy is recommended. We will enter a short position at $0.696, placing a stop-loss order at $0.739 to mitigate potential losses if the price unexpectedly reverses. The initial target price will be $0.63, aligning with the established support level. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, indicating an oversold condition, we will consider entering a short position. Simultaneously, if the price touches the lower band of the Bollinger Bands, it strengthens the short signal. In this case, we enter a short position at $0.696 with a stop-loss at $0.739. If the price reaches $0.63, we will take partial profits and move the stop-loss to the entry price. If the price continues to decline, we will adjust the target price to $0.566 based on the forecast. This dynamic approach combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BTC has shown a downtrend with significant volatility. The RSI consistently dips below 50, indicating a prevailing bearish sentiment. The recent price declined to $183 on April 7, 2025, and the subsequent recovery to $230 on April 9, 2025, suggest potential short-term fluctuations. The forecast for the next week projects a continued downward trend, with prices ranging between $193 and $199. Combining these indicators, I recommend a short selling strategy. Enter a short position at $205, with a stop loss placed at $230 to protect against unexpected upward movements. The initial target price is $195, aiming to capitalize on the anticipated downward trend. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests an oversold condition, which might present a buying opportunity in the short term. However, given the overall downtrend and the forecast, we'll maintain the short selling position. If the price rebounds and reaches the upper Bollinger Band, consider covering the short position at $211, securing a profit while limiting potential losses. The final target price will be $193, aligning with the forecast low. This combined approach leverages both RSI and Bollinger Bands to manage risk and maximize potential returns in a volatile market. Based on the historical data and forecast, Doge-Coin shows a clear downtrend with consistent tests of the 0.01 support level. The RSI consistently dips below 30, indicating oversold conditions, but fails to trigger a significant reversal. Bollinger Bands are contracting, suggesting decreasing volatility and a potential for a breakout. The forecast predicts a continued decline, further reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. Entry price should be $0.00941, placing the stop loss just above the upper Bollinger Band at $0.0136 to limit potential losses if the price unexpectedly reverses. The initial target price should be the next support level at $0.0089. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals a strong oversold condition, potentially indicating a short-term bounce. However, given the overall downtrend, I'll use this as a partial cover opportunity. If the price reaches $0.00964, which is the middle of the Bollinger Bands, consider covering a portion of the short position. The final target price remains $0.0089 for the remaining position. This blended approach balances the bearish trend with short-term volatility, maximizing potential returns while mitigating risk. Based on the historical data and forecast, Render shows a downtrend with increased volatility. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are widening, suggesting increasing price fluctuations. Considering these factors, I propose a cautious long-term investment strategy. We will initiate a long position at $3.02, coinciding with the forecast price on April 15, 2025. To mitigate risk, set a stop loss at $2.82, just below the lower Bollinger Band. The initial target price is $3.38, representing a potential gain based on the recent high. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 30, signaling an oversold condition, we'll consider entering a long position at the support price of $3.28. The stop loss will be set at $2.78, and the target price will be $3.92. Conversely, if the RSI exceeds 70, indicating an overbought condition, we'll consider entering a short position at the resistance price of $4.04. The stop loss will be set at $4.13, and the target price will be $3.31. This combined approach, blending forecast data, Bollinger Bands, and RSI signals, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Reserve Rights shows a fluctuating trend with a recent downward bias. The RSI consistently hovers around the 50 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. The support level at $0.00664 is crucial, and the resistance at $0.00823 represents a significant upside target. Considering the forecast for the next week, which predicts a range-bound movement around $0.0065 to $0.0070, I recommend a cautious, range-bound strategy focusing on short-term price swings. My proposed strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. The entry price will be $0.0065. A stop-loss order will be placed just below the support level at $0.0063 to limit potential losses. The target price will be set at the midband of the Bollinger Bands, around $0.0070, aiming for a quick profit. Conversely, if the price touches the lower band of the Bollinger Bands and the RSI is below 30, we will enter a long position at $0.0064, with a stop-loss at $0.0062 and a target price of $0.0068. This strategy balances risk and reward, capitalizing on short-term volatility within the established range. Based on the historical data and forecast, Sonic, Prev FTM, demonstrates a downtrend, with prices consistently declining from 0.604 to a forecast of 0.394. The support price has remained steady at 0.395, while the resistance fluctuates but is currently around 0.494. The RSI consistently falls below 50, indicating weakening momentum. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a contrarian strategy, anticipating a short-term bounce. We will enter a long position at 0.394, coinciding with the forecast price and the support level. A stop-loss will be set at 0.389 to protect against further downside risk, and a target price of 0.45 will be set to capture a potential rebound. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 35, indicating an oversold condition, and the price touches the lower Bollinger Band, it strengthens the buy signal. We will enter a long position at 0.394, placing a stop-loss order at 0.389 and a take-profit order at 0.45. This strategy combines technical indicators with support and resistance levels for a balanced approach. This strategy will likely yield a high return due to the downtrend and oversold condition. Based on the historical data and forecast, Pendle shows a generally upward trend with periods of consolidation. The RSI fluctuates around 50, occasionally dipping below 40 and rising above 60, suggesting periods of potential oversold and overbought conditions. The Bollinger Bands have been widening recently, indicating increased volatility and potential for price movement. Considering the current support at $3.23 and resistance at $3.64, and the forecast projecting prices above $3, I recommend a long position strategy. We will implement a combined RSI and Bollinger Band strategy. Entry price will be $3.02 when the RSI falls below 40 and the price touches the lower band of the Bollinger Bands. The stop-loss will be set at $2.90, just below the support level and the lower Bollinger Band. The initial target price will be $3.34, aligning with the recent high and the upper Bollinger Band. If the price reaches $3.34, we will move the stop-loss to $3.20 to secure profits and manage risk. A secondary target price will be $3.64, corresponding to the resistance level. This combined strategy aims to capitalize on volatility while managing risk through strategic stop-loss placements. Based on the historical data and forecast, Solier shows a strong upward trend. The price has been consistently moving higher, with a recent breakout above previous resistance levels. The RSI values fluctuate between 53.1 and 67.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering the forecast prices, which project a continued rise to $1.83, I recommend a long position strategy. My strategy will incorporate all three indicators. First, when the RSI dips below 20, enter a long position at $1.62. Set a stop loss at $1.52, just below the lower Bollinger Band. The initial target price is $1.75, aligning with the forecast price and the upper Bollinger Band. If the price reaches $1.75, reevaluate the situation. If the RSI is below 80, move the stop loss to $1.62 and set a new target price at $1.83, based on the forecast. This layered approach allows us to capitalize on the upward trend while mitigating risk through strategic stop loss adjustments.